he started losing property after property after property. He wanted more. He was a genius. The market started to turn. That's another reason for his downfall. And here's a story about my mentor who was worth over $300 million and then he lost it all within 18 months during the GFC. Now here are the 5 main reasons that led to his demise, and I want to share it with you so that you don't make the same mistakes as he did to protect your hard-earned money and investments. At the peak of his portfolio, he owned over 30 commercial property assets, including this one we're in right now, which is number 10 Help Street in Chatswood. And he lost it all in 18 months because of these 5 reasons. So number 1 mistake was he over-leveraged. He thought that in 2005, 2006, when the market was really hot, that he can borrow all the money that he needed from the banks. So he ended up over-leveraging his portfolio. So he started off being 30%, 40% leveraged, and it went all the way up to about 80% leveraged. He mucked around the valuations so that he can get more funding from the bank. This would work really well if you're at a rising market. However, in 2007, 2008, when the GFC hit, the market started to turn and the banks started to call on his loans. And unfortunately, like a pile of dominoes, his portfolio fell very, very quickly. As the market crashed and the banks started calling the loan, he started losing property after property after property. So the lesson here is do not over leverage your portfolio, because when the market does turn, you're not going to have enough liquidity to recover. The mistake number 2 was that he thought the market was always going to go up. So he had a really good ride throughout 2005, 2006, 2007, and he made hundreds of millions of dollars throughout that wave. But no one knew the GFC was coming, and everyone thought the market was going to keep going up. So that's the mistake. When the market is red hot, usually that's the time to start consolidating and then to start reevaluating your portfolio, really balance it, because inevitably the market will start to turn. And when the market does turn, you're in a very healthy position to ride out the downward market and then perhaps take up some bargains along the way. Do not repeat this mistake that the market would always go up, because the market does fluctuate throughout the seasons. The mistake number 3 was having over 12% vacancy across your portfolio. Now, obviously, when you own multiple properties, there are bound to be some vacancies across your portfolio. I mean, imagine having 30 commercial properties and maybe over 100 different tenants. You're bound to have some vacancies within your portfolio. The mistake that he had was that he sat on his vacancies too long. And shortly afterwards, he saw his portfolio reach up to 15% vacancy, particularly around that GFC period where a lot of businesses were going bust and downsizing. He wasn't reacting fast enough and it wasn't proactive enough in his releasing campaign, whereby his vacancy went up to almost 15%. That had a huge impact on his cash flow because he was already over leveraged. So he started to have to supplement his monthly outgoings and interest repayments. So very, very quickly, he found himself in a position where he's out of working capital, out of working cash. So he had to then start to go into different methods of funding his portfolio, and very, very quickly, everything's just starting to collapse. So if you are a commercial property investor and you own multiple commercial properties, as a rule of thumb, try not to have more than 12% vacancy across your portfolio, because usually that is going to be the breaking point. Mistake number 4 is not having the right team around you. Now, my mentor, he was a genius. And when I say genius, I mean every single letter of the word. He has over 9 university degrees, 2 PhDs, and a bunch of qualifications. Who on earth has that many degrees and that many qualifications? For him, learning just comes naturally. And because of that, he relied on himself to solve all his problems rather than having the right team behind him, supporting him. So when shit hits the fan and when too many things are happening at the same time, like every other human being, you're gonna hit your capacity. And just like he did, he hit his mental capacity and it wasn't able to solve the problems fast enough, put out the fires quick enough, and very soon, problem after problem, he found himself in bankruptcy. And number 5 was being too greedy, unrealistic, and being in your own way. When the GFC started to come into Australia, he actually had a chance to sell down a number of his assets and rebalance his portfolio. Unfortunately, he got a little bit too greedy. Properties that he could have sold for a certain price, he didn't want to, he wanted more. He did that, and soon after, when the full scale of the GFC hit, the prices that he was getting originally, he was not getting anymore. So by the time he actually ended up selling the properties, he was in a far lesser position and he received far lesser money for his assets. And again, that's another reason for his downfall. He got too greedy about his selling price, been unrealistic, and overestimated himself and the market. Now, to sum it all up, this is the reason why my mentor went from $300 million to zero in 18 months during the GFC. Here are the 5 mistakes that he made that you can avoid. Number 1 is that he over leveraged. Number 2 is that he thought the market was always going to go up. Number 3, he had over 12% vacancy across his portfolio. Number 4, he didn't have the right team behind him to help him solve his problems. And then finally, number 5, he got too greedy and got his own way, which eventually led to his demise. Now, if you're thinking about coming into the commercial property market and you want to avoid making the same mistakes as my mentor did, and you want the right team behind you that's going to guide you throughout your way, then go and visit my website, propertylines.com.au, book in a call, and look forward to having a chat with you.